Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 9th of June here in 2022, a day the market fell 2.5%, at least the Nasdaq did. Let's talk about inflation. So inflation remains a concern. CPI, which is our consumer price index data, that will come out tomorrow, pre-market. We can see that right over here. We'll take a look at the Market Watch tab and the calendar. So that is Friday here in the thinkorswim platform. CPI is going to come out tomorrow. Will be pre-market. That's on Pacific time, but you can take a look at what the CPI is, what the expectation is with and without food and energy prices. Energy being, and generally, crude oil, and food being, of course, the retail, grocery store, and other commodity prices, which are elevated. But how much are they elevated? Will the report be above consensus expectation, or will it be beneath? And is the Fed going to weigh in? Of course, we'll have the Fed meeting next Wednesday. Might they have anything else to say about inflation? That's the going theme as we get into the remainder of June. So let's start there. This is the S&P 500, or at least the spider. We see the downtrend in motion. That's the general sense. Let me make it a little cleaner. We have a series of lower lows, lower highs, a little sneak, a lower low, a lower high, and here is where we are. We can connect off these trend lines and see that the trend, price trend of higher highs and higher lows, is down. And as we've highlighted in prior videos, the next probability move of the market is back toward these lows. Similar spot to where we were in March, maybe even April. Might be hard to see that the market has a downside pathway to go get and exceed these prior lows, but that's what it did. Still in a bear market, meaning we're 20% off the high. Inflation is still a concern, but tomorrow could be something that would surprise us all, and we are on guard for that. That's why we're not completely aggressively 100% short or bearish. That's the probability. That's what's playing out, but by no means is it guaranteed. So in today's session, where were the weakest sectors and weakest stocks? In other words, which stocks are leading us to the downside? We'll start with financials. In a prior video, we talked about the same logic. So sitting with the daily chart in mind, in fact, we'll even play into the Nasdaq and the Dow and the Russell. They're all downtrending. And the next move of the market does have a better probability play lower. But which sectors are in play? Financials similarly does have that series of lower lows, lower highs with a potential to play back to those lows. We're seeing that play out on the hourly chart. So financials, and in general, these were some of the leading stocks to the downside. Just naming a few of them, Capital One Financial is down from 127. That may trade toward 110 per share. Wells Fargo similarly did have or continues a downtrend with lower lows on par. That takes it from about 45 to under 40 per share. A few other, just talking financials, in a series of lower lows, lower highs, bear flags, if you will, are the going trades into a stock or market or ETF that is trending down. And other stocks are in play. Goldman Sachs is another that did have a trade setup and a sell short signal that has completed the target from prior updates and prior videos. So that was down to 310 per share. That was a target play from 330 to 310. And that's only the midpoint of a downtrending channel. Goldman Sachs has completed and exceeded that downside target played for, but it could go even lower. That's the general theme, and we'll discuss AIG, which isn't quite as bearish, or at least isn't quite as in a downtrend as some of the other names. And that would be American Express would be included in that as well. Just naming, again, financial similar to AIG. But there are technology stocks on the way down too. So those are the main groups that we look at. That would be XLK is technology with a potential to play means trade, down from 142 to under 130. And we won't look at individual stocks, but Netflix could count. Amazon could be, that's a consumer retail type name, but it does, we think of it more of a technology company, but it does actually fall under the concept or context of consumer discretionary. That's XLY, that's retail. Speaking of retail, it is downtrending as well, with another potential sell swing to the prior lows. I is industrials, just to name while we're here. B is materials. That's just coming down from the top of a trading range. Not necessarily a downtrend, but a sideways trend. But in thinking of mean reversion, that would play to the short side at the top and the long side at the bottom, with the target being about the mean or the midpoint. And in this case, it's about 84.50 down from 89. And that is the material sector. We'll skip energy and talk about staples, which is a little flat, but still like the materials. V is healthcare, similarly, not at early session lows, but is in a sideways trend. And we'll finish with XOU, which is utilities, which is coming down from its overbought condition and the highs of that trend line channel. And we'll take a peek at energy. Energy is the only sector that remains bullish and is continuing the uptrend. Overbought, overextended, yes. Better to play on the sell short side as opposed to the long side now. Not to call for a trend reversal, but just to call for another reversion to the mean being the moving averages. And while we're at the comparisons, here is the bond market being TLT, which is an ETF. That's back at the lows. And ZN, we can see it continues its downtrend. ZB being the 30-year Treasury bond, which is also at lows and continuing its downtrend. But on the other side is the 10-year Treasury note yield. And that's something we continually watch. And that is above the 3% level. Once again, 30 means 3% in the TNX. Crude is up there with the energy sector, and gold continues, I think, most interestingly, to remain flat. Being a hedge against inflation was good for the earlier part of 2022, but pulling back the perspective, this is gold futures, not necessarily as grand a hedge as we might think, given how strong inflation is. You can compare the gold chart with just crude oil, which has traded very strongly higher since that COVID or that mid-2020 low. It is just recently off the highs, and that's similar to the energy sector as well. And leading stocks, which would include ExxonMobil and Chevron and some others. But we aren't here to talk about bullish stocks. We're here talking bear, or at least sell side activity. And some of the names leading us to the downside, Amazon being a little different, but these are sorted by market cap and their stocks in the S&P 500 that are making new lows. Some of the names are familiar, others might not be as much. But just looking at the top, sorted again by market cap, Amazon doesn't count because it had the split, and it doesn't count because it's not really at a 52-week low, and that's what the scan is showing. Split adjusted, yes, but not on the chart. So that does not count, even though it is downtrending. Intel is the next stock that did and continues to make those 52-week lows. And as we update our trend line, that is the point. Weak stocks tend to get weaker, and strong stocks tend to get stronger. And that sets up sell short or bear opportunities on the pullbacks or on the way up to the top, and target the middle or new lows. So again, if we were having a hard time seeing how the S&P goes off to make new lows, it would be with some of the leading stocks or key market cap names making new lows first, pulling the index down with it. We do have our attention on financial and technology names and a few others which are retail. And then Medtronics continues to push to new lows, which is off of its 135 high, and not a lot else would be on the market cap watch or watch list. But these stocks would be on those making new lows, and they would include, again, realty or property management companies, and a few retail names would be in there as well. So the thought process is weak stocks do tend to get weaker, strong stocks do tend to get stronger in a general sense, Intel being a long-term trading range. So we will be watching. That will be, it's here. We've had the consolidation. We'll go to the market watch. We had economic data, fundamentals. We could actually go through and check on this. But this is where we'll be watching in Friday's session. CPI, Consumer Price Index. Hotter than expected. Hotter means higher, larger, greater inflation. And what might the Fed say on Wednesday? A little bit less. Has inflation peaked? Is it cooling off? That will be the catalyst, and we are maybe getting a little early warning or early play into the continued downtrend. Inflation still is a problem. That hasn't gone away. The downtrend still hasn't gone away. And the 20% off the high, which makes it a bear market, that hasn't gone away either. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for June the 9th, 2022.